Welcome to, I guess, what we're calling this the PM Level Up podcast, where we're really trying to do long form stuff, right? Really dig in, talk to our guests or property managers or retired property manager, gainfully retired property managers in the industry to really learn from them, hear their trials and tribulations of everything they've experienced throughout their careers. And so I wanted to welcome back to the podcast, Bob Preston. Bob, why don't you give yourself a nice introduction?
Yes, retired from property management, but not retired from the industry, right? Still doing my property management consulting. So I have a lot of experience to bring to the table. So for those listening who are interested in working with a consultant, I'm still doing it alive and well and in the industry. Also have my podcast, Property Management Brainstorm. I am a California resident, San Diego to be exact. My company, North County Property Group, I sold about a year and a half ago. And yeah, still very active in the industry. I was the president of NARPM, California State chapter of NARPM, that is, and served on the NARPM National Board for 2022. I'm an RMP and NPM, and I took my company through the CRMC NARPM process back in the day as well. It's got a lot to share, and it's really exciting to be here, Taylor. I always enjoy these episodes.
Absolutely. And again, I personally really thank you for being able to spend so much time with us as well. A lot of times it's like sound bites or whatnot. We're truly doing the first episode that finally got published was legitimately like an hour long, right?
Yeah.
So lots and lots of content. Hopefully we actually go dive deep and not just surface level. Today's episode, so this is actually episode 4, is the high level topic is scaling to 5 figures, right? Which is 1,000+ doors. And pretty much everything that goes into doing that, right? And whether or not you actually even want to go down that path, right? And really focusing more now on what does it mean to be a great property manager, right? Because a lot of times when you're probably, a lot of you guys listening are probably sub 1,000, and you're running around doing a bunch of things, right? And it's really difficult to finally take a step back or get high enough to like, what does it actually mean to be great in our industry? Like first topic we've got here is just how do you reach a high level of professionalism and what does it actually mean?
Yeah. Can I make an audible here and say
Yeah.
sometimes we like to quantify in this industry with the number of doors. And there's a lot to be said about that, right? Because how you organize based on the number of doors you have is different. If you've got 800 or 1,000 doors, it's going to be different than if you have 50 doors or 100 doors. But sometimes it doesn't really matter the exact door count. What matters is the profitability and the revenue per unit, the revenue per door. Now, I will say, before we dive into that, it seems from the industry benchmarks, NARPM produced some new industry benchmarks back in 2022, that 800 to 1,000 door level is the sweet spot. So 800 to 1,000 doors is the sweet spot. That's where most businesses in property management, in the property management industry, can be the most profitable. So it's an interesting target discussion today. Now, how do you get there? How do you become more profitable? You become, first of all, highly professional, you become very efficient, and you have all the things in place to make sure that you're maximizing and optimizing across your entire company. And so I think there's some parallels to being professional, like reaching that pinnacle of being a professional property management company, really professional, and also that kind of 800 to 1,000 doors, if that makes sense, right?
No, yeah. And I think another soundbite potentially here is I'll bet you when you get to a certain size, let's say the 800 to 1,000 door level, most of the property managers at that size are actually probably saying no a lot more than they are saying yes.
Mm-hmm.
What are your thoughts there, Bob?
Absolutely. In terms of saying no, I think you're talking about which properties you take on and which ones you deny. Once you get
primarily,
once you get to a certain level of door count, you can be more choosy. And I found that out in my business right away. I found that out when I reached 50 doors, right? There are certain types of properties, certain individuals that I didn't want anything to do with. And then I always also applied what I call the 3-strike rule. I would try to save an owner, save a property, any opportunity I could get, even if they were jerks and weren't fun to work with. But on the third time, if I was still struggling to save a property, then that was the time to say goodbye. So absolutely. I think the other thing about kind of that 800 to 1,000 door in terms of count, in terms of saying no, might be your individual team. Sometimes when you have a smaller staff, smaller door count, the tail wags the dog a little bit. You cannot allow that to happen when you get to 800,000 doors. When you hit that 5-figure mark, you need to be precise and you need to hire slow and fire fast when you get into that kind of scenario, because a toxic employee can ruin your whole work environment, basically.
No, absolutely. And I don't think I'm able to necessarily project what I'm doing over at APM Health in our size per se, but we're currently at way over now 200 full-time staff. And
Wow.
I definitely I remember post-COVID, it was stupidly hard to find anyone, right? To hire pretty much anybody. And so I remember before COVID, we'd have at least three high-level checkboxes, right?
Mhm.
It's, have you worked at a property manager, at least multiple property managers, right? Did you do some kind of accounting function, right? Or had, something to do with collecting rent or entering payables or
Sure.
managing owner funding, something like that. And then, of
I know the
course,
industry. Yeah.
and a handful of other small things. And I remember there was a point in time where it was like, okay, as long as they sound professional, we'll give them a shot. And oh my, it was difficult. And now, if anything, we're arguably saying no. I'm not necessarily saying no, but it's we're able to be way more selective, right? Also, market conditions have changed, but also we're much bigger. And you mentioned tail wagging the dog thing, right? Now we're not necessarily constrained by staff and our people anymore. And so whereas before is demand was nonstop. And so we just had to keep hiring just to try to keep up. Right.
I'm going to make this comment too, based on the number of employees you have, the size of your business. And this is true in the property management industry as well. When you hit that 5-figure level, is that by this time you should have a company culture that you're hiring to. So the people that you're bringing in or the properties you're bringing in have to be a match with, because that's really important. If someone comes in on either side, either on the client property side or on the staffing side, that isn't a match with your culture, that becomes apparent really quickly.
Oh yeah, super fast. No,
Mhm.
absolutely. So let's talk about reaching a really high level of professionalism.
Yeah,
And one of the things, like your bullet points, and by the way, I claim no credit for all the topics and the things that we talk about because Bob is absolutely on his game and he's better than ChatGPT as it relates to coming up with the topics to talk about. But the first thing you mentioned here or that we want to talk about is just transparency and business ethics, right? What does it mean at this stage?
I hope it's not just at this stage, but it becomes more important at this stage in terms
Sure.
of just being fully transparent. And I think there are two forms of it, and we've already started talking about it. I think one type of transparency is with your team and the people that you have within your company, your staffing. How much do you want to tell them about how the company is doing, and full transparency within the organization? The other full transparency has to be with your owner base, your client base, in terms of, hey, what's happening at your property, being fully transparent with what's going on with the tenant. And I always had this rule when I would sit down with new owners and say, hey, listen, if we've got news about your property, you may not always like it. It may not always be good news, but you're going to hear it from me first. There's never going to be a mystery of what's going on at your property. And that's what I'm talking about when I transparency. They should have full visibility into the property, what's going on, how the tenants are, what's basically happening within that particular property. And of course, sometimes you have owners that have multiple properties, so you have to be the same way. And that includes not only the financial side, but also just the property care and the maintenance.
Yeah, and Bob, I want to actually share my screen. I want to
Mhm.
showcase an example of being fully transparent and what it could actually mean.
Sure.
Um, and so let me pick the right screen here. And we're definitely going to need to do some post editing in this one because I'm absolutely sharing client information stuff, or I guess client information. Raj is a great friend. He's not going to worry about this. But long story short, this is so Raj is a client of APM's. They were dealing with an owner. If any of you guys use AppFolio, I'm sure you've heard of additional fees or suppression issues, right? And if you suppress or unsuppress, beginning balances and ending balances start getting out of start getting wonky and stop matching. And so, long story short, he sent me this kind of email CCing me, and it was his communication between himself and an owner or a client of his, right? And effectively had something to do with there was actually a setting change. For some reason, AppFolio actually changed the setting, and it went from unsuppressed fees to being suppressed, which then caused issues. And essentially, as you can read here, what Raj is essentially doing is he's look, they had nothing to hide, right? He responded and essentially provided a bunch of just screenshots and documentation and resent the financials, ran an analysis, right, of beginning and ending balances. And then you can see all of the spreadsheets that ultimately, or not spread, yeah, PDFs and financials that he essentially reran for his owner, right? And then as you can see, this is the response from the owner, but it's quite literally, hey, thanks for the quick response, right? He's going to follow back up. And as it stands, he's satisfied, right? And he doesn't need to necessarily meet tomorrow. And like this is difficult, right? Like these are when an owner is angry and they're coming to you probably for something that you don't actually have control over, especially in this situation where you can actually see like the system for
Mhm.
some reason was changing a setting, right? And at least coming from Appfolio, when the system does that, literally means someone at Appfolio did this. And so this was completely outside of Raj's hands. And yet he still responded very quickly and just almost gave too much information in trying to be transparent.
Yeah.
Yeah, I just when we talk about transparency and business ethics and things, like we should hopefully, this industry should never want to hide anything, right? Like it should all be readily, don't trust, don't believe me, like here's everything, right? We
Yeah.
have nothing to hide. So,
Yeah, and there's lots of benefits to that as well, because if you're fully transparent and you have a high degree of ethics, you can share the facts and just those are the types of things that are going to also keep you out of court. If you're
yeah,
being face value with your clients, then they're going to appreciate that. And you're telling them the truth about everything. So there's nothing to hide. You're not going to get nailed for anything, right?
yeah,
Customer may not always like it. The property owner may not agree, but at least you're telling them the truth. And
yeah,
that also crosses over into just being completely ethical. If you're transparent and you've got a high degree of ethics, then you're typically doing the right thing as well. Sometimes, okay, in this case, nobody did anything wrong. I've had cases where, all right, a property manager does make a mistake, or they did click the wrong button and hid something, and maybe something got inaccurately put on an owner statement through Appfolio
right.
or whatever the property management software might be. Doing the right thing and being ethical about it means, okay, taking responsibility when you screw up. Part of it.
Absolutely.
Yeah.
So you mentioned potential lawsuits and things like that. I'd love to delve into this. Like, I want to unequivocally say, like, lawsuits are freaking expensive. You never want to get involved with them. You should absolutely try to settle. But usually, if you're at 1,000 doors or at this level, you're gonna get embroiled into stuff, right? Whether you want to or not, it's just inevitable, right? You have 1,000 doors. That's 1,000 new faces of tenants, like at least every 18 months, right? Just in and out of transactions and all this kind of stuff.
Well,
How do you stay in legal compliance?
so do the math, right? If you have
Yeah.
1,000 doors, you're likely to have, in most cases or many cases, at least two tenants,
Mhm,
right?
mhm.
And if you have ownership where you are dealing with a couple, then that's two, right? So you
Yeah.
have four times at 4,000. And
Yeah.
then during any course of the year, you have some turnover of the tenants. So maybe in a given year, you have 5 to 6,000 different personalities that you're dealing with
Yeah.
across the spectrum of human behavior, right? Yeah, it can be incredible. So I think one of the things I think you were touching on is staying in compliance and making sure you're always doing things the right way.
Mhm.
And I think that's part of being ethical as well. It's making sure you are in compliance. And by compliance, what am I talking about? I'm talking about your finances, staying in compliance with trust accounting, making sure you're squeaky clean, you're not bending the rules. You're that the last thing I ever wanted to do is be accused of funny business with the books. That is
Yeah.
something that in my mind was just a complete non-starter and had to be squeaky clean at all times. So here now we're talking about professionalism, we're talking about ethics, and we're talking about compliance, all three of those. So this is
Mhm.
where I think it's really important to make sure when you get to this level that, yeah, you can say, hey, I run a pretty tight ship and I'm really confident in that, and that comes across just with how you are also with your people at all times. Legal compliance is also following the law, making sure you're doing things properly when it comes to your tenant landlord law and your lease agreements, and making sure that all that is tidy and fair housing. And there are all these other areas of compliance that cross over into that. When you get to this number of door count, you cannot be stretching the truth, you cannot be stretching the laws, or ultimately you're going to be in a lot of trouble.
Yeah, and I think if we dive a little deeper into this, and I think there's now probably two camps or two mindsets. And I'm not saying everyone's going to filter themselves into these or sort themselves into them, but you've got some business owners who are like, I'm going to hire the experts and they're going to do what they do best. And I don't have to even think about it. And I think that's probably fair, right, to a certain extent. But up to a certain point, you're going to have to know what's going on. You may not be doing it all, right? But you should at least be aware of what are the new standards and what are your procedures now. I remember, and this happens now at APM Help all the time, right? It's because officially I'm the chief happiness officer. What does that really mean? That really means at the end of the day, if any clients of ours are angry or unsatisfied, I tend to hear about it. And most of the time now, I find myself always coming back to, great, I hear the client's complaints or the client's problems or whatever it is. Did we stand by our SOPs? If we stood by our SOPs, we're almost 99 times out of 100, we're in the clear, right? Because we've got all of these things that have been set up, right? Like we follow the procedures. Yeah, at the end of the day, it's unlikely to be our fault, but especially same thing, 1,000 doors, right? You've got to have those procedures set and your team has to follow them, right? Because any deviation from the standards, and it essentially opens you up to, oh my gosh, what do we actually do? Versus my mindset now is almost always, I assume we followed the standard procedure, and I'm surprised if we didn't. Whereas most of the time, if you don't have those procedures in place, you're like, oh crap. Then you have to go try to figure out what happened and all this kind of stuff.
Yeah, the CEO of the company, the president, the owner, whatever you want to call that person, the broker of record is ultimately responsible. They're the one whose license is on the line, and they're the one or the one. Sometimes there's more than one owner or more than one broker. They're the ones who are on the line legally, and they have to make sure that things are being followed properly throughout the organization, even if they're not involved on a daily basis, and even if they're not involved in the daily detail of interactions with tenants and landlord tenants and the owners and even the vendors involved.
Yeah. So Bob, let's talk about insurance, right? Because insurance obviously is one of those, there's several things in a business that can make or break you, right? You get hit with some specific thing could absolutely take your business down. It's hence why a lot of times you have these big buckets that insurance technically covers for these business ending kind of situations, let's just say, right? Especially in our world, right? Because there are these 4,000, 6,000 potential new stakeholders every year that you have to deal with, right? Like, why don't we start with just what's the base level or base amount of insurance you should have? And then let's go into what are some specific insurances that our industry may or may not actually, it may be beneficial for our industry.
And I think we put this into the category of risk tolerance or risk management, whatever you want to call it, because ultimately that's what it is. I put the types of insurance, and look, here we're not going to get into the details of workers' comp and employment liability insurance. There are all these different types of corporate insurances that you should have, right? Mm-hmm. Liability, you get your general package, but primarily what we're talking about here is errors and omissions, right? Mm-hmm. The professional liability. And how much you have in terms of coverage is really between kind of you and your agent. But certainly it should be enough to be able to settle, to be able to protect you against some sort of a lawsuit, defend yourself, whether that be $1 million, $2 million in coverage. That's up to your particular risk tolerance. But that's the one type of insurance. Let's just call that the corporate insurance, right?
And I should note, right, because I didn't know this when I was starting, or this is one of those you Google search and then you're like, but is it's professional liability is the exact same thing as errors and omissions. Okay? That's right. They're interchangeable. They're one and the same. If someone asks you about professional liability, they're talking about errors and omissions. When someone says they're talking about professional liability. Okay. For the longest time, right? I'm like, are you talking about the same? Are they two different policies? No, definitively it's the same thing. If you're a property manager, you need, or professional liability, you need it.
Some people think it's general liability.
That's not the case.
Liability is if somebody comes into your office, slips on the floor because there's torn carpet and falls and hurts himself, but that's completely different.
Yeah, I'm sorry, and I think you misspoke there. Let's clarify. General liability is when someone comes into your physical office and something were to happen.
That's right.
Right. Professional liability is some mistake, some overlooking of something in the course of you providing a service or your goods and services.
That's correct.
Yeah.
That's exactly what I intended to say. If I didn't say that, yeah, you're correct. Okay, then there are basically two other categories that, well, I'm going to actually three other categories
Mhm.
of insurance that are really important to know and to track. One is the insurance that your property owners have on their particular property. And there are some industry standards out there in terms of minimum coverage. They might vary by state. And the state of California is generally a minimum of $300,000 in liability. And I think it's also important to make sure, and this is where the tracking comes in, that's just not a standard homeowner policy, that it's a
Right.
rental dwelling policy, right? If you're renting your property and your insurance company doesn't know about it, and something happens at the property where a tenant is damaged or injured, and the insurance company didn't know you were renting it, that could be a problem. Okay, so
Yeah.
it's part of the responsibility of the property management company in terms of their risk tolerance to make sure that the owner is aware of that and they have the right protection in place. And then the other thing is, back to the corporate side, is making sure that as an entity, you are covered under that policy as an additional insured.
Yeah.
I've been through cases where tenants get upset, they want to sue, and knowing that you're covered by the owner's policy is a big relief to know that's properly in place. Now,
Yeah.
is the property owner going to know this? Are they automatically going to have it? Are you just going to assume? No, you have to make sure that the policy is in place, that it's renewed every year, that it's the right type of coverage. Sometimes they might be changing insurance companies. So this is one of those things, those risk tolerance areas where, running a tight ship, being professional, making sure you've had the right insurance in place is really critical. And so you have to have somebody tracking it, making sure that's right.
Absolutely. And to clarify, or just for everyone who's listening, asking for proof of insurance from your landlord that's not the same thing as being added as an additional insured,
That's right.
right? And similarly, if someone gives you a certificate of insurance or an accord with your name on it, that also still does not necessarily mean you're actually been added as an additional insured. That could simply be them going to their broker or something online, a form, and saying, I just need proof of insurance. And they ask, who are we addressing this to? And you could easily just type and say, oh, please address it to Bob Preston at bobprestonpropertymanagement.com, right? Like, that's not actually adding you as an additional insured. If you've never done this stuff before, yeah, definitely there's differences. Make sure you're actually an additional insured.
Yeah, and there are different types of insurance policies out there. They're starting in certain states to offer blanket policies, right? Where you can say, hey, if you're not going to do this, and we're going to charge you, and you're going to be under our company blanket policy for and things like that. I don't want to get into that level. We're keeping this at a pretty high level here today. We could have an entire episode dedicated to the types of insurance, and I'm probably not the proper one to comment on that anyway. You should have an insurance expert. But okay, next type of insurance is renter's insurance, making sure that the tenant has some form of a very minimum landlord liability in place. And again, this has to be tracked. Earlier, we were talking about Appfolio. Appfolio offers a general kind of landlord liability protection, LLIP, I think it's called, it through Appfolio. That should be the bare minimum at all times. Hey, if your renter can't show you that they've got their own insurance before move-in, then they should be charged that as part of the normal move-in procedure. We always made tenants have renters insurance. It also benefits them if something happens or their goods are damaged or stolen, so it makes good sense. You've heard a lot about resident benefit packages out there. Second Nature, other companies, Latchel are offering them. A lot of those products have insurance built into it, offered to the renter.
Yeah.
Final area is your vendors or your technician insurance. Okay. If you're farming out or subcontracting out to plumbers, to electricians, these types of people, you have to make sure that they have proper insurance in place. And I'm going to add it one further step, make sure that if it's a trade that requires licensing in your particular state, that they have an active license.
Yep.
This is really critical. We had a case where the tenant wanted a reverse osmosis system installed in the kitchen for drinking water. The owner approved it. We sent a plumber in when I still had North County Property Group. Everything was hunky-dory. The next morning, the tenant woke up and their downstairs was completely flooded. All right.
Oh, no.
Well, thank God, two things. Thank God that the plumber was licensed, had an active license, and thank God they had their own form of insurance, because that ended up There's this whole subrogation process that takes place with the owner's home insurance and then the insurance of the vendor, and then they settle and they figure out who's going to pay for it.
Right.
If that was a plumber who wasn't licensed, Taylor, or didn't have their own
Oh,
insurance,
no.
guess what would happen? The owner of the property would have come after us, right?
Yeah.
These are the types of things when you get to that level of door count. And I'm not advocating that if you're smaller, you can still cut corners. You shouldn't. But
Yeah.
when you get to this level of, you have to have these processes in place for tracking these kind of things.
Yeah.
And oh, by the way, those vendor insurance policies should also include your company as additional insured. So that's kind of insurance. There are also other things we always do for risk tolerance. We would always have our vendors sign a waiver of liability, all those kind of things, or make sure
Right.
that their people all are covered by workers' compensation. It can get really deep on that, but it's a type of risk tolerance that's really important.
Yep. And look, as you get bigger and bigger, at a certain extent, or to a certain extent, your job as the owner is to mitigate as much risk as possible. And God forbid you've ever sat through a legal proceeding or gone through a deposition or discovery or any of that. But if you've never gone through it, I'm going to tell you right now, it is the biggest waste of your time, because there's a gazillion other things you need to be doing when you're at 1,000 doors, quite frankly, that you just really don't want to be dealing with this, right? Yeah. Try not to get sued. All the things we just talked about are ways in which to either prevent or highly mitigate getting embroiled into a lawsuit.
That's right. Yeah. And then how are you tracking all these policies? You talked about, hey, every now and then I get called in a situation, it escalates to me and I have to jump in. You were talking about that at APM Help. No different than when you're running a property management company. Yeah, I had a team that was constantly, doing all the detail on a daily basis, but every now and then someone would come to me and say, hey, this person's upset, they want to sue, or something happened. And what I typically do first? Well, I would go and try to gather all the information, just like Raj did in the example. Well, okay, where's all that information stored? Is it all stored in, is it in a cloud server? Is it on your property management system? Is it within AppFolio? Go. And if you're not finding things, it's really easy as a property owner. You don't need to be spending and tracking the stuff yourself. It's really easy on an occasional basis. Go in and just pop open a property file and see what's in there.
Right.
You're not seeing the things that we were talking about. We always kept it in the cloud. We had folders for every single property, and in there was typically a section on the tenants, typically a section on the owners, and then we had another cloud server folder for all of our vendors. And there we could find all their insurance. And if I started seeing files where it wasn't complete or the policies weren't current, then there was hell to pay.
No, yeah, no, absolutely. And again, like those situations where it doesn't matter, quote unquote, or like your employees may think it doesn't really matter until it absolutely matters, and you run into those situations. I think this is a great segue to like, how do you foster a positive company culture, right, while maintaining the team's motivation, right? Like we're talking about essentially like at a certain scale or certain size, right? A lot of employees may not necessarily understand why we're doing, like why we have to get insurance policies and double check and make sure, okay, this one's coming up for renewal. Go and call the vendor and make sure, hey, did you renew? Can we get a copy of your renewal? Like the why is very difficult, right? Because it feels or seems like it's like this very repetitive, mundane thing you got to do. But how do you maintain a great work environment, Bob?
Well, let's talk about culture in general. Every company has a culture, even if it's not intentional. Okay.
Sure.
And I've seen the good, the bad, and the ugly. In fact, I just wrote for the NARPM Residential Resource publication for January. It's coming out in the January issue. And it's titled this is the title, like keeping a good company culture. And what is it? How does it define? Well, it's basically the personality of your organization. And if you've got people that are questioning you all the time, and you've got people that don't understand why they're being asked to do things, that's a sign of a bad company culture. It's a sign of, okay, not being fully transparent with your teams, all these kind of things. And company culture will develop without guidance on its own. And this is typically when you get into the bad and the ugly versions of company culture, because there are things happening that the owner is completely unaware of. I get a lot of calls in my consulting business. Can you come in and fix our company culture? And all the questions, what's going on? It's gotten toxic. Well, how'd that happen? I stepped away. I wasn't paying attention. And then I came back a few months later and, oh my God, you wouldn't believe what's going on. Okay, well, that's a sign that they probably weren't paying attention to company culture to begin with.
Yeah,
right?
to begin with. Exactly.
And I think that what I see is that there are common characteristics in good company cultures. And these typically have to do with how you're treating your employees on a day in and day out basis. And I call it those little atomic habits, right?
Sure. Yeah.
Heard a lot about atomic habits. It's the little things, walking in every day, how you greet people, what you say to people. It's when you haven't seen them in a while, or how you're running the meetings, or your level of transparency, and how you're encouraging people maybe to take time off, right? Use their personal time off, a positive team environment. And so some of the characteristics that I see for good company culture have to do with these inclusive behaviors as well, that I call them. So ensuring that every employee feels like they can participate and being heard, providing input, and being valued overall. And Taylor, you asked, well, I don't know, why am I having to check this insurance? Why am I having to do that? Okay, listen, if you've got questions, speak up and ask. We're going to hear you, and then we're going to explain it and you might disagree with why we're doing these kind of things, but at the end of the day, hey, this is why we do them as a company. We expect you to do it, and then everybody's on the same team because at least they had a chance to be heard. I was always big on diversity as well, and I'm not just talking about racial or religious diversity or things like that. I'm talking about just people with different perspectives on things.
Mhm.
And again, this kind of goes back to, all right, people who view things differently can add, the sum is greater than the individual parts. And it really comes out true. And also just empowerment, accountability, and of course, finally, recognition and appreciation. You have an owner or a leader, it doesn't have to be the owner, but the leader of the organization, especially when you get to 1,000 doors, you better be recognizing and appreciating your people, because these kind of
Right.
things really make a big difference. And I find that those basically 4 or 5 things really make a big difference in terms of creating and fostering. It has to be fostered, cared for,
Yeah.
culture.
Bob, how difficult is it to change your company's culture?
I think it's really
Especially at the 1,000, like you're at this scale.
I think it's really hard, and it will take time. As a leader or a company owner, you can explain what our company culture is. You can write a big chart in our office that had the company culture in the center and what we stood for and all these kind of things. That came from me. But if people aren't embracing it, ultimately the culture comes from the people and their willingness to either have a culture that they've helped develop or follow that leader, go to war with that person, go into battle on a day in and day out basis. And if they're not willing or able to do that, then something's wrong with the culture. So to change that, yeah, when you're this big and you have a team, like you talk about having 200 people, that's just not going to happen because Taylor wants to change the culture. And it
No,
was true
absolutely.
when Bob wanted to change the culture. It has to come
Right.
down through the different tiers of the organization, and it could take time.
And I think if anything, I was trying to get at was if you're listening to this podcast or this episode and you're at 50 doors, right? You're at 200 doors and you're already hearing, let's say, murmuring and complaints and things like that, right? Now's the time to try to start making these changes, right? This is definitely not something you should be like, "Oh, we'll fix the company culture when we get to 1,000 doors, when we can finally breathe and come up for it." That's not gonna happen. Like it's gonna be exponentially harder at that point to change anything.
No, for sure. And some of these stories that I tell stories all the time, and I mentioned it already on this podcast, where potential clients will come to me and they'll, hey, our culture is bad. We need to fix our culture. Can you come in and help? And it's a big undertaking. Okay, what's going on? We've got this one person, and we've known that this person wasn't right for the company for many years. We've never done anything about it. And now people are starting to quit. And all you got to do is scratch a little bit beneath the surface and it all comes out. The point is, to change the culture or to build the culture, somebody has to be tracking it and somebody has to know what's going on. I always encourage weekly one-on-ones with my management team at all levels, all the way down to even occasionally picking up the phone and calling vendors and saying, hey, how are you doing? We like working with our team. What's going on? So these types of things are always really important in building the culture.
Yeah, so let's talk briefly about reporting, one-on-ones, things like that. One of the things that we've found out over at APM is, well, that there's almost two classes here. When it comes to a people manager or manager in our org, we've found that realistically, they should have no more than like 8 people reporting to them.
probably about right. Yeah.
Anything more than that, and they may be getting by, but I guarantee you something's falling through the cracks, right?
Mm.
Or they're going to be burnt out very soon. And similarly on the client side, now granted, we have a different business than property managers, right? If anything, we're doing accounting for property managers. We've found the same thing. It's like anywhere between 8 to 12 is the sweet spot for us as account managers, let's say. Anything more than that, and it pretty much like it's diminishing returns per se, like the quality just falls off a cliff because there's just so if you think about it, like for us, like having 12 clients, let's just say 15 clients, there's only 5 days. Like that literally means on average 3 every day you've got to have a meeting with, let's say. It just doesn't work. And I'd love some actual numbers here. What do you see in your business from a, let's say, either property manager to door count or property manager to their team makeup kind of situation? Let's talk about that.
Oh my gosh. Okay, we're getting into staffing structure here
No, we
now.
are. Yeah, I am jumping a little bit around, but
Oh,
yes.
you're fine. And I think that's a really good topic because, and this is where I think door count does matter. Okay.
Yep.
Because if you've got 50 doors, you're probably going to be doing things differently than if you've got 1,000 doors. And it also depends upon, are your team members local and are they W-2 employees or are they virtual assistants? So there are all these staffing models that are out there. The general ones are the portfolio model, the departmental model, right? Where portfolio model is that you have a property manager who does literally everything. They do the leasing, they do the move-ins, they bring on the new clients, they handle all the maintenance, they do everything from soup to nuts. A departmental is a little bit different. That's where you have, okay, you might have a marketing person, you might have a leasing person, you have a different maintenance crew, you have, these are different. Then there's hybrid where, okay, maybe you have some that are doing, maybe somebody's doing the leasing and the marketing, but the property manager does everything else. And then ultimately, when you get to 800 to 1,000 doors, or you get even beyond that with some of these big companies like Pure or Evernest or Mind, you get into what's known as the pod structure, right? Where you have, for the number of doors you have, and every company is different, Taylor. So it's hard for me to say, hey, this is right for
Oh yeah, yeah, of
property
course.
managers. And it depends upon what kind of doors you have. But
Right.
typically the pod structure is like, okay, for every increment of 100 doors, you're given, there's a property manager, there's one assistant, there's 2 virtual assistants, and then there's a maintenance coordinator, this type
Right.
of thing. But it's defined. And that's how I see it work out there. And then it's up to the individual company to decide what the proper staffing model is for their types of properties. My properties at North County Property Group tended to be on the very high end. We had 500 or 600 properties that were the equivalent of 1,000 doors. Those, because they were very sophisticated and complicated properties, that was a different way of managing and staffing than maybe if you're managing multifamily or apartment buildings.
Yeah. And speaking of multifamily, what we've found over at APM Help from an accounting standpoint is a multifamily, and I'm specifically talking like a bigger apartment complex, it's about a 10-to-1 ratio. So 10 units in a multifamily or apartment is equivalent to 1 single family when it comes to bookkeeping, accounting, things like that.
Yeah.
More so the complexity, right? Don't get me wrong. Obviously, if you've got 10 units, you've got 10 rental payments coming in, right? Like you're going to have more, but collecting rent and entering rent shouldn't be the hard part, right?
Yeah, for sure. I think what is happening in the industry today, and it has been for probably 8 to 10 years now, is that property management is a business where it's very task oriented. There's not a ton of creativity except maybe in 1 or 2 positions on the particular team. And so you need people who are going to get stuff done, run tasks. And the vast majority of those tasks aren't done in the field, they're done at a desk. And
Right.
what that means is that person doesn't have to have office space in your facility to complete it. A lot of companies, especially since the pandemic, have gone virtual completely. They don't even have offices. And even more companies have gone to the point where they have people from other countries or other economies who can do a lot of the skilled stuff for running these tasks, but command a much lower wage. Right. And I think that's the way this has gone. And that's what helps. I think when you get to 1,000, 800 or 1,000 doors, you have to be very attentive to profitability and your labor ratio of your overall expense. And one way to accomplish that is to have virtual assistants, remote employees, whatever you want to call them, right?
Yeah. Bob, I'd love your opinion here. Now, granted, this may be a complicated opinion, let's say, but what would you say to the people who are like, I just want to support U.S. jobs. I want to support my local community. I'm running a property management company. I'm at this size, right? But obviously, there's tons and tons of vendors out there, and obviously, the trend is moving towards
Yeah.
VAs, people who are maybe near shore as well as offshore.
No, I've heard that. And I've heard that when new staff members join the company and they're all, oh my gosh, that person's in the Philippines. That's weird. Or that person's in Mexico. Wow, that's strange. Or
Yeah.
let's call it out, right? They're taking jobs from Americans. Okay, first of all, the ability in property management, which is a razor thin margin business, let's not mince words here, being able to pay somebody a wage to accomplish the types of tasks that need to get done can be really difficult, especially in a market where the cost of living could be high. San Diego, it's very extremely difficult to hire someone into a maintenance coordinator position and then still be profitable as a business. And my thing is, it's your moral responsibility to be profitable above all else, right?
Yeah.
You have to survive and be profitable to be able to keep growing the business, to be able to employ people, to be able to do the right thing for your tenants, for your owner. And so as the business owner, it's your moral responsibility to be profitable to a certain level. And if that means having to hire people out of country who can do those particular, and by the way, we're not talking about people who are uneducated. There are a lot of smart people who, for them, to earn $10 an hour, $15 an hour is huge money because
Oh
of
yeah.
their particular economies. So you just have to get over it, is my answer, and realize that, hey, this is the way the economy is today, and finding the ability to find a person who's willing to do this job and is going to be happy in it is not likely going to be in my local economy.
Unfortunately, and hopefully there's gonna be people here who are listening who are in small town USA. I'm sorry, but sometimes you're just not gonna find that accountant or bookkeeper that not only knows property-based trust accounting, because I promise you it's not just as easy as look at this invoice and copy and paste it or transcribe it into a form, right? If you think that is all that it entails to do property-based accounting or bookkeeping, try it and try it for a month, right? Let alone actually understand these softwares, right? Like these software companies, they'd love to say, oh, it's as anybody can use the software, right? I think, Bob, you and I have been in the industry and we've been at this for a long time, right? These are massive ERPs, right? These are massive softwares that essentially run your entire business, right? These are not, they're relatively easy to use, yeah, for the value they provide to your business. And it should be equivalent in the resources you give to train and understand those softwares.
Yeah.
Yeah. So, Bob, I'd love to dive a little deeper because I do think this is a very interesting conversation around the staffing structure. Because there tends to be I wouldn't call it a heated debate, but there's definitely some that are like, no, it's this way because of this. I don't love it when people do that, but I tend to almost want to always say, look, like what's working in your market, right, that you're so certain about is great. That's great for your market, but there's plenty of other markets out there, even in America,
Sure.
right? What works in Jacksonville, for example, probably is not going to work in a smaller town with only 15,000 residents. And so let's talk about this portfolio structure. Let's say the sub 100 units or
Yeah.
doors, right? Can you actually get away with one person doing everything?
I think it's hard. My background was corporate, Valley to be particular. And so I grew up being in business where you had departments for everything.
Yeah.
And so that's what I favored. And as a business owner, I also wanted consistency across my business so that when you had two different properties within the business, they were being managed the same way. And the accounting was being done the same way, not by two, three different people who maybe had different standards.
Right.
So that's how I viewed it.
Yep.
Where is consistency most important? For me, it was in marketing. Okay.
Mhm.
making
Interesting.
sure
Yeah.
that the property listings were done the same so that an owner couldn't come to our website and see their property being listed and crappy pictures and a bad listing description. And then there was another property right next to it that was quite a bit different. So I thought
Yeah.
that one to be considered. I think accounting, right? If these are typical departmental jobs, the way I see it,
Yeah.
anything that's outward facing to the world is a departmental function, corporate function. I
Mhm.
think where you can't get away with departmental is when you have all these tasks to be done, there has to be some accountability to a portfolio. Now, if you've got 50 to 100 doors, can one person do it? Probably,
Yeah.
if you give them assistance, right? If you have a senior property manager, maybe assistant property managers. I'm rattling off different levels that I commonly see. And then maybe you have a maintenance facilitator or coordinator whose job it is to just make sure that the plumber gets there for the appointment with the tenant, fixes the toilet flapper, and then bills
Yeah.
accordingly. And so there are those, but like a lot of those positions could potentially be virtual assistants as well. It gets into the philosophy of your business in terms of, okay, what's ideal? Because as I mentioned earlier, 100 properties in San Diego coastal where they're complex and expensive properties might be different than 100 properties in a more rural environment or something like that. So the
Yeah.
exact number and count is, I think you need to really give that some thought, but typically that's how the structure would work.
And I think if anything, what we're trying to say here is your staffing structure, your team structure, unlike company culture, this can and actually should and will change, right? Like when you have 50 units, right, or 50 doors, you're not going to have a senior property manager and another assistant property manager. That's just unrealistic, right? Because remember, you're operating with only 50 doors worth of management fees, let's say, or revenue, right? And so you likely have a portfolio structure, right, earlier on. And then as you start adding more doors, you start realizing, oh my gosh, I can't handle this myself. I had to literally clone myself to do another 50 doors. And then you start opening up and realizing maybe a departmental structure where there is consistency. There's one person that's doing accounting and doing it well, let's say, or one person handling leasing and marketing and does it extremely well and consistently. Then it starts making more sense as you start growing.
Yeah.
But also realistically, when you're smaller with a smaller door count, right? Like going a department, just because we say that's what Bob and I, let's say, prefer, doesn't necessarily mean that's realistic for your business at your current stage, right?
Right.
Yeah.
Absolutely. And the title of this episode is Professionalism in the Five-Figure Door Portfolio. So I think when you get to that level, departmental becomes tougher,
Yeah.
except corporate functions. You can still have corporate functions, accounting, IT, marketing. And that's not really what I mean by departmental here, right? But then you have to organize yourself in a way where you can have consistency and some degree of automation probably within your organization where everything is done the same way, right? And here's where your processes and systems and the stack and all this becomes important. And you start developing your rules around probably some kind of a pod structure. Okay.
Sure.
There's an operations manager or an operational director, and then that person has maybe a senior property manager who has two or three property managers reporting to them, and they each have their own portfolios or their pods that are all manned with a certain number of staff based on, okay, what works for that particular portfolio, right?
Yeah.
Under the rules for the company. And all that's obviously got to fit within the profitability parameters of that particular business.
Bob, is it possible? Because I don't actually think anybody's gotten big enough quite yet, but is it actually possible to have tens of thousands of doors under one management entity per se, or management operation, but still have the personal touch? Because I almost always hear, right, our clients will talk about how they're better than the big, let's say the big four maybe now, right? And those big four, the owners that come from them, it's always the biggest complaints, I'm just a number, right? I can't even get a hold of anybody anymore. Is it actually possible one day to have the personal touch, but then still have a run relative, I wouldn't say necessarily automated, but run operation behind the scenes?
It'll be interesting to see. I think the jury's still out. I don't think
Yeah.
anybody's quite cracked the code. You have a lot of, and by the big four, I think you're talking about Pure, Evernest, Mind. I'm not sure who else you might include into
Yeah,
that.
maybe Poplar, or there's HRG, Home River
Poplar,
Group.
maybe
Yeah,
HRG, sure, maybe
yeah,
Rome, right? And the key will be is how to what degree there can be standard operating procedures like you talked about within your company that can be rolled out across multiple regions, across hundreds of branch offices. People do this in different types of businesses and are successful at it eventually. This is
Yeah.
all kind of new for property management. That's why I think what you hear is that there are still boutique firms that are alive and well in all markets and regions around the world. People who are independent have 800 doors and they have no intention of selling to those businesses, and they're still in favor because I think of that personal touch.
Right.
And not only is the personal touch in question for these larger companies, but also you're starting to hear a lot, and I threw out the word earlier, kind of automation when it comes to processes and procedures. Well, how much automation is too much, right? You want to be able to automate certain pieces of the business in terms of all your processes, but you still have to have the ability to answer the call when somebody's ringing you, because property management, guess what? It's very much of a people business.
Yeah. If anything, like I think the strategy should be automate as much as you can so that you can make yourself available to pick up that phone.
That's right.
Like not the, I wouldn't say the other way around, but I feel like a lot of people just like automate so that I can get out of the business. Look, like you're a property manager, the owner of the business for a reason, right? Like at the end of the day, do you really want to truly get out? If that's the point, you might as well just sell the business, right? Go sit Mai Tais on a beach by actually selling and truly getting out at that point.
That's right. That's right.
Yeah.
Absolutely.
Okay, let's talk about. So, we've talked a little bit about this automation, right? Are there any common pitfalls when it comes to implementing new technology or trying to get more and more automated?
Yes. You ever heard the term garbage in, garbage out?
Absolutely.
It's an old mainframe concept, basically, back
Yeah.
in the days. And I'm going to date myself a little bit. My first job was with IBM right out of college and was still selling mini computers back then when PCs were just relatively new. And the whole notion there is, look, to get good data out that proves something, you have to have good information that goes into it. And that's
Yeah.
true with automation and property management as well. And so it all starts with the systems and the processes, and those need to be defined and put in place, and they need to be followed and enforced. And I'm talking about without automation, right? People need to
Oh,
know
yeah.
what they're supposed to be doing.
Yeah.
And then and only then, Taylor, can you take it into some other software, be it Process Street or Lead Simple's become quite popular now for process automation, or
Right.
for a while there was HubSpot, people were using HubSpot, whatever it might be to automate. There's some degree of automation now in AppFolio as well in terms of lease renewal and stuff like that. Those processes better be really baked and really well
Yeah.
understood. Otherwise, the automation, people aren't going to do it, people aren't going to follow it, and people are just still going to be doing their own thing.
Absolutely. And so let's dive into, at the end of the day, we touched on profitability, right?
Mhm.
Obviously, you're constantly in search of automation and making these more efficient, optimizing for, uh, ultimately, usually you're optimizing for profit. Like you said, one line that I think is very good, which is like your responsibility at the end of the day as the business owner is to make sure you survive, right? So be profitable,
Yeah.
right? If you're not profitable, I'm sorry, you're not going to survive unless you happen to have unlimited VC pockets that you're able to just go dip into, which relatively speaking does not exist in property management, right? Like you, at the end of the day, your responsibility is to actually be profitable, run a profitable business. Let's briefly touch on like what is it? How do you even begin to understand if you're actually even profitable?
Okay. It's, I think you're being a little facetious here. Most companies do have some financial accounting package, which spits out a P&L and a balance sheet and all those kind of things. But
Sure.
depending upon who you're using and how you're doing that, obviously the bookkeeping and the accounting in the background is pretty darn important to track all this. You're basically your income minus your expenses is your degree of profitability. And what the industry is finding, and look, there are people who are very profitable with 50 doors, this in their companies that are very profitable with 10,000 doors. I think the sweet spot in the industry right now seems to be in that kind of 800 to 1,000 door area, where the average profit margins, I think, according to NARPM, are around 32%. So you take your gross profit and you divide it by your overall revenue, and that should be somewhere as a target, as a benchmark,
Yep.
or a KPI above 30%. That's what people are shooting for. I don't know if you probably know this because you're on the financial side. The average profitability in the
Oh yeah,
industry.
no, it's less than double digits, like 7%, I believe.
Yeah, I think the latest, I think it's getting better because
Yeah.
people are starting to focus more on ancillary. It used to be about 5%. Now it's up to about
Right.
11. But
Yeah.
still, as a business owner running a business that has 11% profitability, that's really tough. And
Yeah.
you can't just keep banking on more volume. Let's get there. To a certain extent, you can say that, but once you cross the 500 door threshold and now you're approaching 800, 1,000 doors. Okay, it's time to start doing all these things we've been talking about in this episode. Getting
Yeah.
professional, making sure you're doing things the right way, have a company culture, have the metrics, have the processes in place so that you can get to that promised land of above 30% margin and an employee labor ratio that's probably under 50% of your overall expenses.
Bob, at what stage did you actually get, let's say, monthly financials or monthly P&Ls on your business?
Oh, right away. I've got a corporate background. I found out really quickly. First of all, I didn't really like doing my own accounting and I wasn't very good at it. And so I just needed somebody to very early on just put a structure in place for the books. And then the NARPM accounting standards came out, I think, gosh, I want to say 5 or 6 years ago. That was a big boost for us so that we knew, all right, here's what other companies are doing in this industry. Let's follow that. And then if we ever get to a point where we need somebody to look at our books who's outside of our company, but in the industry, they'll understand what they're looking at. I still in my business today see a lot of people are just doing it their own way. And it's tough to understand what all the different categories mean
Mm-hmm.
and what's in that particular line item. And it's difficult to understand if it's real. Right away, you need to have good financials. You have to understand what's going on so that you can look at it on a regular basis. For me, I would look at it multiple times a month because we had QuickBooks Online. You can go in and you can look at it. And by the way, we're not talking about trust accounting here. We're talking now about
Yeah,
corporate.
we're talking about the corporate books.
Talking about
Exactly.
profit and loss. And unless you're looking at it on a regular basis or have some sort of forecast in place and projection or budget, whatever you want to call it. By the way, people listening, if hopefully this will go live before the end of the year, 2023, because now's the time to be working on those financial forecasts or your budget for the new year. You should always be tracking to see if you're in line with what you've projected for each month. And if all of a sudden you're not making your numbers, okay, you got to make some corrections, right? You should be staffing to that model. You should be eliminating costs to that model if you're not making your forecast. You should be adding technologies to that level. You should be providing IT equipment based on that model, all the things tracking to that.
So Bob,
Especially if you're getting into this kind of property count level.
oh yeah. What would you say to someone, a property manager owner, let's say, who can never file their business taxes on time? Right. Not because they're trying to just delay taxes because maybe they can invest their tax money and get a higher return, let's say, and whatever. They just legitimately cannot file those taxes because they've probably never done their corporate books.
It's time to get somebody who can track that for you then. It's time to get professional help, right? I do see that a lot. A lot of CPAs today, they'll delay or they'll file an extension automatically. They don't even try to do it.
Yeah, don't even try. Yeah. I'm not talking about that situation. I'm talking like legitimately, even if you could have filed, like you just can't. You just don't have the ability to.
Yeah. Then it's time to get professional help. You get to a certain point in your revenue, and again, this comes back to risk tolerance. We talked about your books and your finances are another area of risk. And by the way, not just for having accuracy for tax reporting and things like that, but there are cases of embezzlement within this industry, and you've probably heard them, Taylor, too, where, hey, you got to wake up to the reality here. If you're not having someone else cast their eyes on your books, then you may be in a situation where you're being taken advantage of and you don't even know it.
I do want to talk briefly about, because I do think this is I think everyone in the industry has to deal with this, but do you do real estate sales? Do you do transactions?
Aha. This is a good one.
Yeah. No, this is probably going to be one of those, we'll add it as we'll put it behind give us your email. Let's talk about this. But this is.
Yeah, there are a lot of companies who pride themselves on we don't sell properties. And I've always advocated, in fact, I think we touched on this in one of the previous episodes.
I think we touched, but we didn't really dive too deep into the economics of it, the like competitive landscape around, like all the like strategy around, do you do our real estate sales or not? right?
Yeah. My attitude was always, why not? You've got
Mhm.
this inventory of low growing fruit that's there for the taking. And
Yeah,
if you don't do it in some way or form, or stay in touch or communicate with your client base about it, then you know what? They're going to go to somebody else and they're going to do it and they're going to get all the commission. So you should at
right,
least be getting referral fees or something at a very minimum. Um,
right.
in my business, I was sending um, every owner CMA, competitive market analysis, twice a year. I had a VA who
Got
would put
it.
it together. I would look at them. First of all, it's a fantastic service to
Oh
the
yeah.
client. Hey,
And
here's what
and
your property's worth, right? Should I
oh
sell it?
yeah.
Maybe not. Let's
Yeah.
talk about that. And then it's also a way to say that, hey, and if you do decide to sell, we'd like to be the ones to put it on the market
Right.
and handle the listing.
There's a pretty famous influential real estate broker that's based in New York called Ryan Serhant,
Mm-hmm.
right? He's done objectively, let's say, very well for himself and now his own brokerage. But on TikTok, I saw recently, he put it, his stake in the ground as there is nobody in the business of real estate that follows up as good as many times as I do. And he tells stories around just it's exactly to what you had said, right? It's if you don't follow up, someone else is going to in your stead or in your place, right? And he said, even if people don't respond or whatever it is, right? He just consistently has the processes to send them. And it's not just a, hey, how you doing? Remember me when you want to sell, right? It's like every interaction he has with his clients or potential clients, let's say in these situations, is always he's trying to provide some kind of value. He's trying to give a competitive market analysis. He's trying to showcase here's if you're buying, if you're looking like here's some properties that fit your profile that you mentioned. And just by doing so, almost like annoyingly, but just by doing it, that he's done extremely well. And I think in our business in general, like just we're also very so task oriented that it's we get this done, get it off my plate, and we forget about it. And we have to always remember, right? We're in a relationships business at the end of the day.
Yeah,
And I think from a financial standpoint, like when you lose a contract or when you lose a unit to being sold, you're losing your recurring revenue,
that's right.
right? So at least try to like mitigate the blow of that by getting a one-time pop of minimum referral fees, right? A referral commission. Best case, you actually get like I don't know if we can say the specific percentages anymore due to the lawsuits in the industry, but at least get some kind of transactional commission.
Let's just do some round numbers. In my business, I always viewed when a new property came on board, it was worth, depending upon how much rent we could get, usually somewhere between $3,500 to $5,000 a year in terms of the revenue per unit. Like $400 a month would be $5,000 property to me. Okay.
Yeah.
To make $50,000 off of that property, you have to keep it in the portfolio for probably not 10 years because, the rates
Yeah,
go
there's
up.
profitability. Yeah. Let's
But
say
you
30%. Yeah.
say 8 years
Yeah.
where I could sell that same property that's $1 million property, make my chunk, and I'm making 5 years or 6 years of property management fees in one fell swoop. Okay, yeah, I got to replace that property, but ultimately, if I don't do it, someone else might. So the average attrition, I think, in the industry is about 20% a year.
Yeah.
Say 10% of those because they fire you or you fire them, or the owners want to move back in, or a family member moves in, and probably another 10% are probably because the owner wants to sell.
Yeah. They just want to sell. Yeah.
If you've got 800 properties and 10% of them sell each year, that's 80 properties.
Yeah.
That's
Maybe
pretty
20% is
darn,
160, right?
yeah.
Like literally you put that to a monthly basis, that's 10 to 15 units a month on average, right?
So
Yeah.
I always looked at it in terms of having business units. Now we're getting into the property counts where you could have business units. So there was the property management business unit, there was the real estate business unit. And by the way, the times when I would feel like I'm getting kicked to my teeth is owner would come and say, "Oh, we've decided to sell the property, and I've got an agent who's going to do the listing." I'd go, "Wow, why didn't you consider us?" And then make some comment like, "We didn't know you did real estate." And I'd be like, it's so demoralizing.
Yeah.
Of course.
Yeah.
So you have to define it like, hey, our business has this business unit. And so we
Right.
do, and let them know, right?
Yeah.
And
Let them know.
their
Yeah.
business unit for me was maintenance, right? And we haven't really touched
Mm.
on that today, and monetizing maintenance in a way that however you decide to do it, some people mark their maintenance up and they just say, okay, every maintenance job, we're going to mark up 10%. There are people that advocate that. There are people that advocate, okay, having a coordinator, and every time there's a maintenance job, okay, you charge a maintenance facilitation fee. I ran my maintenance business like a general contractor. We had a general contractor's license. And so the maintenance division, now we didn't have techs. So just making that clear, but we ran it where we had the vendors were under the maintenance division. The property managers referred to the maintenance division, did all the back and forth with the vendors charge our maintenance division. Then our maintenance division would bill the property management.
Yeah, ultimately bill back. Yeah.
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 So anyway, that was how we did it, and it was very successful. So
Cool.
the other thing about that is you're reducing your dependence by having different forms of revenue into the company. You're reducing your dependence on that one thing that a lot of property managers still bank on, and that's our property management fee.
Yeah.
All right. Very good.
Thank you, Bob. Really
So,
appreciate it.
and thanks for having me. It's always exciting and a pleasure to talk to you, Taylor, and look forward to our next episode.
I look forward to it as well.
Okay.
Right.